Hey, happy Easter, guys. All right, if you hear kids, people talking in the background, I am with family, so don't mind them. So I'm just doing a couple videos while I'm resting. All right, so let's get at it. All right, now I'm on BTC USD, and we just really want to go over some supply and demand zones. All right, now as I mentioned before, we want to look for these banker candles. Now I am on the 1 hour chart, so it's going to be a little bit more activity on the 1 hour chart. But I can clearly go back here and I can see. Remember, when our banker's candle, all right, what was the last candle before there was a shift out of a particular zone? So we got this bearish candle to come in, and then we got a nice little bearish candle to follow up that's a little bit stronger. So we're going to take this last candle right here, which was this green candle before we had a shift. All right, so this is the last candle, all right, before we had this major shift. Now, there's two ways we can do this. Yes, we can go with the green one, but we also can do a same color elimination, basically. All right. So it doesn't have to be the opposite color. All right. So once again, this is technically this is the last candle before there's a major shift out of this particular zone. Okay. Now watch this. We're going to take our rectangle box, take it from the top. We're going to take it down to the bottom of that candle. So we went from the top of this candle down to the bottom of the candle, and this is our zone. I want to do a bar replay so I can show you guys how it will look. All right. And we want to look at what this is the supply area. We want to see price come back into these areas. Oh, let me do that. All right. So this is supply area for us sitting up in this zone. Now remember the rules. Whenever price leaves out of this area, typically price wants to come back into this zone for distribution, meaning that it wants to unload, okay, because there are unfulfilled sale orders here. Now, with that being said, you're going to have a lot of people that's going to have stop losses up here in this area that are short in the market. And sometimes this becomes liquidity grabs. So you may see some spikes above this area. Okay. So let's hit the play button so we can see how often we come back into this area. All right. See this liquidity grab right there? Back in the area. Another liquidity grab. Another liquidity grab. All right. And now we're in real time. Okay. Now, look how many times we came back. We came above liquidity grab, and another grab. These are all the people who was going short. All their stop losses are sitting up here. Okay. And this is typically what retailer taught, right? Hey, put your stop loss above these areas and they're nothing but orders. Okay. They would start singing while I'm on here. But anyway, all right. So this could give us opportunities if we're trading, but most of us are long-term investors. We don't have to worry about it. But you need to know how the markets work. So understand the supply area. Now, here's a key thing right here is that we have this area. It's a demand area. Okay, what was the last candle before we had to move out? Okay, so some people like to go with the opposite color, but like I said, it's really just the last candle, to be honest. So we're gonna take this candle from top down to the bottom of it, and boom, this is what a demand zone. Okay, this is demand zone. So our demand zone sitting right in there. So what do we expect here? We expect that, hey, since this was an imbalance, that their orders are still sitting here by orders. Now, can this be invalidated? Yes. Price can just do what? It can come on down in here and just it can blast through, or it can hang around this area and it can go lower. All right. Regardless, it's still an area that we have to respect. But when you go on a lower time frame, you're gonna have more of these on your chart. And that's why we really want to do our supply and demand zones from either the 4 hour up to the daily. Okay. So let's just start with the daily. And that gives us a lot less noise on the chart. So you see how it looks now. But let's take all this off. Now let's look see where demand, supply and demand zones are. And here are some key areas. Here to there. All right. So we're talking about a $51,000 Bitcoin if we come back and visit this particular zone as a retest. Okay. Now up here, this was the last candle before we had to drop. So then we're doing this from the what top to the bottom. And look what's happening. We got 1, 2, 3, 4 candles were actually five. So this one, all right. So this one came out. This one came back in to do what? To collect some sell orders. Okay. Because there's an imbalance. Whenever price leaves out of a zone, that means there's an imbalance somewhere. That means that there are more sellers than there are buyers. Okay. So if there are more sellers than buyers, that means that you got to continue to do what? Come back in this zone. Come back in the zone. Come back in the zone. Come back in the zone to do what? To collect unfulfilled sale orders. You have to make multiple trips back to this area to fulfill the biggest players on the planet orders. Okay. Just because of somebody say, hey, I want to sell $1 billion worth of Bitcoin at this level, they may only get to sell $200 million of that billion. So that means they have $800 million left of what? Sell orders that are sitting up here, and they're gonna what? Work the market to get back into this area. Oftentimes, they're doing a lot of hedging. Why? It's because in order for them to get the market to come back up in this area, they have to put in artificial orders. Okay, they have a huge sell order here, but it also are putting in huge buy orders to get price back up here. And then if this buying pressure comes up here, the question is, if they are selling, who is buying? The person who's looking at this video, the retail investors, the people who aren't sophisticated enough, they're doing all the buying here while they're doing all the selling here. Okay. Now what happens when it comes down here? They need what? If I want to buy something for cheap, I need more sellers than I need buyers. So if a lot of people can start selling and we get to this area, I want a lot of sale orders. So then I can come in and buy. Okay. So what else can happen? They can do a lot of manipulation with this as well. They can say, okay, we could come down in here and then we could have a massive spike up. All right. And then we can come back down here again. And then what's going to happen? A retailer can come in and say, "Hey, that was a key zone. I definitely want to look to buy here because look what it did last time." All right, they get here, but then this time they get you with that. So it's all manipulation. Our job is to understand what is happening on the charts, who is trying to gain a favorable edge. Now, luckily, most of you should be investors instead of traders. But I'm trying to give you a trading mindset so that you can increase your probability of getting better entry points when it comes to investing and just understanding the market dynamics in of itself. So the more you can understand it from a trading mechanism, you understand the investing side a lot better. Because now you will know where there are traps, where there are, what is the market really trying to do, and where is truly liquidity. And that's what you're looking for. And here's another thing we want to monitor. Just because price is moving up doesn't mean that this is all organic buying. This literally could just be short sellers covering their positions because they thought that the market should have went down, but instead of it going down, it did what? It went up. So they're thinking that hey, price should be coming down here. Instead, they have to cover their what? Shorts, meaning that hey, if I was going short and the price is going against me, I have to buy back. So you got to buy back what you borrow. So all this becomes artificial buying pressure that comes in and pushes price up. So what is truly organic? That's what you have to ask yourself. And sometimes it's very difficult to know what is truly organic buying or what is short squeeze buying. But once again, some of that stuff really doesn't matter in the grand scheme of things. It's because why? We're long term investors. But what we want to do is we want to make sure that we're in favorable areas. Now, I saw I gave that demand zone up around the 51. Okay. And what we can do now is we can take a Fibonacci extension tool, a retracement tool, and we can see exactly where this line up at. And we may have some confluence. And it does. It lines right up to the 61% area. So we feel that, hey, if we do get some type of price action and come back down to this area, this is a key area where I want to then start looking to invest. Now, if you buy Bitcoin, it's one thing, but this will give us confluence to get ready to what buy some altcoins if Bitcoin has this pressure coming down here. We have the halving coming. Everybody is anticipating the halving. There's too many people anticipating that, hey, we're supposed to be doing this miraculous move. But I want to play the other side. Okay, what if we do something like this, and then during the halving, we do this, and then that. Guys, that's a reality. It possibly could happen. I'm not saying it is, but let's consider this right here. Look at this move right here. Sort of similar. Just moving it on now. We get up here, and then we get this drop right here, and then we get this big rally up here, get everybody bull traps, and then bam, right there. And what do you notice? Where price come back to? An area that served as what? Remember, what was the last candle before it moved out of this zone? It was this one. From the top to, all right, now we get real close. We didn't get there, but it came here. And that's another thing I want to talk about. Sometimes you got to think of zones. So some zones, all right, you see how close this looks? In reality, if we go on a lower time frame, we may see something else. We may see some other structure here that gives us this. All right. But a lot of times with other technical analysts, they talk about hidden cameras, meaning that, okay, see this camera right here, but these other ones that hide behind, they too can serve as other levels as well too. Okay. So you see how we start looking at these other levels. Now we're getting really close. We're at the edge now. Now, here's the thing. What some people like to do is they like to take the whole entire consolidated zone. So they would do something like this. They would take every candle that's in this zone and they do it like that. So they would consider this because this candle breaks out of this zone and then it leaves. So if you want to do it like that, that's fine. I prefer to do the last candle. But if you want to do the whole entire zone like this is perfectly fine too. You're gonna have a wider zone, and it says on the daily. But we do come back to the edge of the box and do it. So you see how both can work. All right, this one will probably be a little bit more. Uh, it's gonna it's gonna be a little bit. It's gonna give you a broader range to deal with. So you can do that. So how would that look if we were doing a supply zone? We'll have to take this all of this right here. So if we're gonna do a supply zone up here, we'll take it from the top and we'll take it back to the bottom. And we know that price for right now has not breaking out of this zone. So if somebody was really like looking to trade this or short this or whatever, they would be looking for a market to do this. They want to see market break here. If it breaks here, they're gonna be looking for shorting opportunities and they're gonna take it back to the edge of this consolidated zone. All right. If it breaks out, they either look for a retest, then they go higher. Regardless, that's what it's dealing with. Okay. If you pay attention to the market is filled up with a whole bunch of bull flags and bear flags, if you think about it. All right. Look at this right here. I'm going to take off the extension of this so you can see. Let's do this. All right. Take that off. All right, so we'll just stretch this. Bam. All right. You see that? And do something like this. All right. You see, I got your pole. All right. So like a flag. All right. And then watch this. We'll do a bar replay. All right. We're gonna take this whole zone right here. So from this point all the way up here, and then we're gonna take this and we're gonna put it in here. All right, and this is gonna be our target right here, based off of that. So you see how I'd say a lot of the markets is just bull flags or bull pennants all throughout the market. Hit it, all right, boom. Target's hit right there, based off that particular move. Okay, so you see that on so many occasions, guys. Watch again. I'm sorry to this. Like this. Okay. You either start here or you can start here, whatever the case may be. Boom, bam. So the target's hit. Yeah, and I went higher. All right. But if you was on the call yesterday, you see that we use what? Let's do another bar replay. I'm gonna show you what we use. We use a extension tool, right? So with the extension tool, we can get our targets. We got our impulse. We pull it down. All right. We got these areas that we feel that price can come to. So this is target 1 and 2. All right, and up here would be target 3. And we got target 4. And this is target 5. We don't have to do that right now. All right, take these off. All right, so based off this impulse, this is what we're looking for. Looking for price to at least hit this one first and so forth. So I like the extension tool better than just measuring like that. So we got 1 and 2 hit, 3 and 4. All right, and then we got 5. And then, the next one will be up here. But y'all see how all these targets were hit based off that measurement. All right. So I'm not going to keep you long. Continue practicing. Use your bar replay. If you have a free account, you got to use a daily chart. Can't go down on the lower time frame. But go back. Practice it. Find your impulses. Go through the chart. Find impulses. Measure it. And get used to it. Okay. Use your Fibonacci retracement tool. Use your Fibonacci extension tool. Um, play around with it, get used to it. All right. And we'll meet back up on the next one. All right. This your boy E White. I'm out. Have a great one.